Hey, welcome to the Everyday Investor. My name's Nicole Edmonds, and I'm filling in today for Rav Tour. Today we're going to be talking about how to make money investing in real estate with private equity. I have Darcy McConvey joining me on the show today, and with Darcy, we're going to go through the 4 questions we ask whenever we're presented with any investment option. That is, 1, what is my return on investment? 2, when do I get that return along with the money I put in? 3, what is the minimum cash amount needed? And 4, what is the risk in the worst case scenario? Grab your pen and paper, don't go anywhere. The Everyday Investor begins in a moment. The Everyday Investor has been brought to you by ProFunds Mortgages, fixed returns, real security. The Real Estate Centre Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
For over 10 years, Strong-Based Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
At Here to Clean, we understand that inviting someone into your home is a big deal. All of our cleaners are carefully vetted to ensure we send the right person to care for your home. We offer a variety of cleaning services to meet our various clients' needs, from small office and vacation rental cleaning, post-renovation and move-in cleaning. We will arrange a team of professionals with the right skill sets to tackle your toughest jobs and get them done right. Email, call, or text us to discuss your unique needs.
Hey there, this is Anthony Maniaci. Here at Maniaci Sobel Altbaum, we're a law firm working for you in all facets of the law. My specialty is working in corporate commercial law and real estate, but we have lawyers that work in all other areas, including litigation and family. Our practice focuses on service with a personal touch, delivering in-depth legal advice and guidance to our clients, treating you as people, not as a number. You can reach us at maniacilaw.com.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
The Real Estate Center is one of North America's leading real estate firms, helping everyday people buy, sell, and invest in real estate. By leading with education, we make sure our clients have the know-how and confidence to make informed decisions, allowing them to reach their goals. Through our vast network of experienced advisors, the Real Estate Center is able to provide a full-service experience across the entire country. Whether you're looking for your first home, an income property, or commercial investment, we're here to help. Visit our website at therealestatecenter.com.
Hey, and welcome back to the Everyday Investor. My name's Nicole Edmonds, and I'm filling in today for Rav Tour. Today we're talking about how we can make money investing in real estate with private equity. I have Darcy McConvey on the show. He's the Director of Capital Markets with Greybrook Realty Partners. Darcy, thanks very much for joining us.
Thanks for having me. It's great to be here.
So Darcy, you work for Greybrook, and we're going to get into what Greybrook does. And I want to ask you what it means to invest in real estate with private equity. But before we dive into that, how did you get into the world of real estate?
Originally, I came in contact with one of the partners at Greybrook when I was post a sort of playing pro hockey / minor pro hockey in the minors. After that, I became an investment banker, and I met one of the partners at Graybrook, actually funny enough, in a hockey tournament. Fast forward the tape a little bit, my family had invested in a couple Graybrook projects, so obviously I loved what they did, stayed close to the partners, and this was now 5 years later. And Graybrook was growing, there was an opportunity, and that's how I ended up in Graybrook. So I've always had an interest in real estate.
So we're talking, Darcy, about investing in real estate with private equity.
Sure.
What does that mean?
Private equity is effectively investments made by really private individuals or institutions. So really, what does Graybrook do? So Graybrook allows individual investors to invest in and alongside some of the largest builder developers in the areas that we invest in. So we really focus on Toronto and the Greater Toronto area, and we have quite a niche but strong focus in South Florida, Miami, and Fort Lauderdale. So basically, we allow dentists, doctors, lawyers, people like the viewers out there, the audience, to invest in very large-scale real estate and share in the returns that this large-scale real estate ultimately can generate.
For me, the investor, if I want to get involved in some of these big developments that I'm seeing in Toronto, are these like high-rise type developments, or are they different than that?
We really focus on sort of detached home or ground-based housing, where you've got detached homes, townhouses, and what's called stacked townhouses. And we also do high-rise, so single or multi-phase high-rise. Our high-rise investments are really sort of core Toronto, effectively sort of Lawrence or south. And so really it runs the gamut. We have a bunch of different sort of products that we would invest in. For
me, the investor, if I see one of these developments going up, I can't just go to the builder and say, hey, I want to put in some money. It doesn't work like that.
No, it doesn't.
So what is Graybrook's role in that if I want to get some of my money involved in one of those developments?
We raise the capital. So we have about 4,000 active investors. And our role is to bring the majority of equity to a given development. The developer's responsibility is to effectively bring the minority of the equity. So the difference, from that point forward, it's the developer's responsibility to execute, market, sell, construct, complete. And we as investors can never be asked for additional capital. Once a development is completed, we effectively split profits with the developer 50-50.
Wow, okay, so sometimes we talk about joint venturing where we've got a money partner, we've got a working partner. This sounds like
Very
that,
similar.
Just to a way greater scale.
That's exactly what it is.
For me, the investor, I'm doing no work. I'm just putting money in and getting a share, is that right?
That's pretty much it. So, one of the reasons we love it is oftentimes when you think about investing in real estate, it's a very active way to invest.
Yeah.
So whether you're buying an income property, you have to fix the toilets or the plumbing or whatever it is. The way we invest is the exact opposite. So it's purely passive. So once you write a check and you're invested in a project, there's no work for you as an individual to do. And then we've got these developers going to work for us every day. In the back end, Graybrook itself also sort of co-manages these projects and goes to work for you. But from an investor perspective, it's as passive as it gets.
We, the investors, are putting in the majority of the capital. Mm-hmm. We've got the developer, you said they're putting in some of the capital as well, is that right?
They do, yeah.
Okay, and then we're developing something and splitting the returns.
Exactly.
Okay, what are the returns?
The reality is when you're investing in the manufacturing of large-scale real estate, the returns are quite significant. So our goal in every project that we do is to double an investor's investment in 5 years or less. So that
Wow.
sort of would correlate to a 20% annualized return is always going to be our target.
Which is so unique from what most people are doing passively with their money. To not have to work for it and make returns like that is, I think, very unique.
It definitely is unique. I don't think this way of investing is necessarily unique, however. Like institutions like pensions, insurance companies, a lot of very high net worth people have had access to this type of investing historically. And have been investing in this way. But it's never really been something that sort of everyday people can access. So it's unique so much as the broader population hasn't been able to access it, but it's not unique in terms of a structure and the returns that it generates is definitely not unique. It's just unique to what we're used to.
Right, as an individual
as
of
an
what
individual.
I can get involved in. Rav invests, I think, pretty much solely now with Graybrook. Since I've heard about it, my family's been involved. I'm in a few deals.
Sure.
I think it's an amazing way that you can, get your money out there working in real estate. The returns are great. Talk a little bit about how this looks from a getting involved in the deal, the manufacturing, of these developments, and how those returns are coming to us.
So one of the things that Rav and I speak about quite often is just ways that you can sort of depict what it is, so people can really understand, like, well, what's actually happening here, and how those returns generated. So we often give an example of a high-rise project. So in a high-rise, typically our contribution to the project would be about 15% of the total cost.
Okay.
So assume that 15% of the total cost, and again, this is just for an example's sake, are going to be via our equity contribution. As of the late 90s, early 2000s, banks used to lend to projects without having pre-sold them. And what happened was there was a bit of a crisis, and so the bank said, how about this, Mr. Developer? You sell your project or you sell your units before we'll lend to the project. So this is sort of the beginning and the origin of the sort of sales center and buying in pre-sales, right? And so now what happens is there's a pre-sale program and people will come in and put a down payment down. The bank will say, once you've sold 70% of the units in pre-sales, at that point we'll lend to the project. Those pre-sale deposits make up an additional 15% of the total cost in a project. And then the remaining 70% of the cost in a project would be bank finance. So at that point, the bank comes in and says, we now know that there's enough sales and there's enough equity that we're comfortable lending to the project.
Okay, so you're selling before you're actually putting a shovel in the ground, spending money on this development.
Well, you would spend money in so much as you'd likely have acquired the land, and maybe there's some soft costs, so sales, marketing consultants, other expenses that you may have incurred.
Okay.
But you're not physically constructing until you've sold to a certain, whatever the required number of units is, and usually, the benchmark number that we give is 70% of the units.
And do you pick that threshold so that you know that before we start spending money on building this, that we're going to be profitable, or we're close to profitable, or we're more than profitable? Where's that line?
Yeah, that's just it. So, well, one, it's not us picking the threshold, it's the bank. So the bank's saying, depending on the price point of the units and the amount of deposit required and all these things, the bank says at 70%, we know that this project is more than break even, there's enough profit where we're comfortable as a bank knowing that we'll get our money back. So it's really the bank determining what your pre-sale number is. And so when we're talking, in terms of this, again, it's sensitive in it so much as it could be 60%, it could be 75% in pre-sold.
And they're determining that.
But we'll just say 70%.
Okay, we're going to take a quick break here, Darcy. When we come back, I'm very excited to share with the viewers what the minimum investments are, so we'll talk about that. Don't go anywhere. The Everyday Investor continues in a moment. The Everyday Investor has been brought to you by ProFunds Mortgages, fixed returns, real security. The Real Estate Center Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
ProFunds Mortgages and its affiliate Valor Capital offers expert service and funding solutions for builders and developers, offering first and second mortgages with a combination of institutional and private lending. ProFunds Mortgages and Valor Capital offer a full-service construction and development package with in-house engineers, developers, builders, planners, and the best of financial analysts. With the many years of experience and credibility, ProFunds and Valor would love to be your added value financial partner. Visit us at profunds.ca.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
For over 10 years, Strong Base Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
Like people, businesses have their journey, their path, sometimes straight, but more often evolving, growing, and adapting. And like people, businesses' needs change, creating the need for knowledge in areas like accounting, consulting, and tax. Areas critical to your continued growth and success, all part of the journey, and all part of what we do together with you. So that when your business has arrived, it's ready to keep going. MNP, wherever business takes you.
Hey, it's Vitali, Rav's door and window guy. Here are 4 quick tips when choosing doors and windows for your home. 1. Get 2 to 3 estimates from a reputable vendor. 2. Choose the right manufacturer. 3. Make sure you have a warranty. And 4. Get professional installation. To book a free estimate, contact us at torontodoorsandwindows.ca.
Welcome back to The Everyday Investor. I'm Nicole Edmonds, filling in today for Rav Tour. We've been talking with Darcy McConvey from Greybrook Realty Partners. We've been talking about investing in real estate with private equity. We're kind of talking through an example deal so we can understand how we're getting our profit out. Sure. In the last segment, we mentioned returns of 20%, so you're kind of taking us through how
to understand that.
How that can be. So I think you were just telling us how if we had a sample deal, we would put in private equity, right, from the investors of 15%.
Yes.
15% of that deal would come from pre-sales of condos.
Yes, deposits from pre-sales, yeah.
Deposits. And then we've got 70% coming from the bank.
Exactly, so your construction financing. So
Okay.
I think a really simple example would be to sort of take those percentages and flip them into dollars. So say it's a $100 million project, to your point, 15 million of that would be sort of your equity, 15 million of that would be your pre-sale deposits, and then 70 million of it would be bank financing. So, you know, one of the ways now, if you think about, okay, that's your cost, well, what would be sort of, how do you get to those returns? So you assume that in that project, for example's sake, that project's going to develop or generate you 30 million in profit. So in our structure, we're typically the majority of the equity, the original 15, the developer's the minority, and then on the back end, we'd split profits with them effectively 50-50. So of that 30 million in profit, 15 million of it would come back to the investors, and 15 million of it would go to the developer.
So the equity that we were collectively in for, majority, like you said, the investors, a little bit coming from the developer, is 15 million. And then at the end, we're getting back another 30 million, splitting that. So we, the investors, are getting back 15 million. We're making 20% typically on our money. So in this situation, we need to, extend for time. How long are we in this kind of deal for?
For this example's sake, we'll say it's a 5-year project.
Okay.
That 15 million coming back to the investors would be more than a double on what they originally put in. So
yeah, because you'd be hitting that 20%.
Exactly.
Okay, so for you, the viewers at home, if you're doing the math along with us, we've put in 15 million. We're getting back 15 million in profit over 5 years. So that would be 100% at the end of 5 years, divided out to annualize that return. We're making 20% return on investment per year. Is that right, Darcy?
It's pretty much bang on, yeah.
Okay, so tell me as well, 5 years for this example. I would imagine different projects, do they all take 5 years, or you've got different timelines?
Sure.
How does that work?
Yeah, so they definitely don't all take 5 years. I would say our average timeline's 4.5 to 5.5 years. But I think one of the unique things about what we do is that, and again, because investors can invest on a project by project basis, some of our projects would be 2.5 years, some 4, some 5, upwards of 7+ years. It really depends on what we're building, the scale of what we're building. An example would be, we could do say a 100 townhouse project, buy the land that's basically ready to go, meaning I could build on that land tomorrow, and that could be a 2.5 to 3 year project.
Okay, so you're buying the land when it's ready for development. It's not, you're not buying it and getting it ready for development, because that does take some time in there as well.
Yeah, for sure it does. So I think there's a large spectrum in sort of land development and then construction, right? So one of the things that we don't do is take entitlement risk. So entitlement risk is effectively buying land, say employment industrial land, and trying to rezone it to residential land. So many of our partners would do that well before sort of we'd come into the picture, and it can be a lucrative way to invest, but it's also quite a risky way to do it.
Because if you can't get that zoning change, what are you supposed to do?
Exactly, it could be trouble potentially. So we don't want to take that risk on behalf of our investors' capital. So we don't take entitlement risk, but where we will come in is right after sort of the designation. So if it's designated low rise or low density or high density, we would come in right at that point and take it through what's called draft plan approval and site plan approval, which is getting the land from effectively raw land, although designated, through to approved lots or the plan of what is going to be built. So whether it's, you know, where the houses are going to be, where the roads are going to be.
How long can that time take?
That time can take anywhere from 2 to 4 years.
Okay.
So we would invest at any point in that sort of spectrum. And then once you have your sort of site plan approval and draft plan approval, that basically means the land is ready to go to be built on immediately. Your services are there and it's ready to go. So then you have your construction phase. And that phase could be anywhere from 2 years to 3.5 years.
Okay.
So in total, if you started right after you got it entitled all the way through to construction, it could be an 8-year project.
Oh,
plus.
wow, okay. And are you always exiting at the end when something has been fully developed, or are there different exit points?
So when we come to our investors with a plan,
Yeah.
there's a sort of a definitive plan in place, meaning that, you know, likely we'll take it through to completion of construction. But it's not always the case. So one of the things that sort of I think makes us unique is that we have flexibility in our structure, meaning that if we buy land right after it's been entitled, and we realize that if we take it through, say, draft plan approval, and it's worth a lot more than what we bought it for, we would consider exiting early from that site if the return on the investment was what we want it to be. And, you know, at any given point in a development, there's going to be a risk-return trade-off, and we're going to be making that evaluation real time throughout the course of development.
And so you're making that decision on what's best for
the investors.
Okay, and how they can get
100% of the time.
Good return.
Exactly.
Very interesting. Okay, I did promise this right before we went to break. So tell us, what are the minimum investments for someone to get involved in this?
So minimum investment in any project is $25,000.
Okay.
And again, one of the things that's quite unique is that, you know, we have anyone from entrepreneurs, dentists, doctors, lawyers, up through to sort of high net worth Canadian families and really anything in between. So everyone invests on the same terms and conditions, meaning that there's no share class or share type. Even Graybrook management and partners invest on the same terms and conditions as our investors. So minimum investment of $25,000 in any project and sort of upwards from there. And one of the things about it is you can invest in a 2.5-year project, a 4-year project, a 7-year project, maybe pick a project in Oakville, one in downtown Toronto, one in Miami. So you get diversification over timeline, over developer partner, over geography or submarket, and ultimately your distributions would come out at various times. So I think it's a way to build a portfolio within a real estate development investing strategy, and a way to sort of diversify along a number of lines. So, you know, if I were to pick between the two, probably building a portfolio versus going all in one was probably a little bit of a better way to do it.
Yeah, and you said something there about your distributions like being staggered. Is that how, are investors getting their money back at the very end of the deal? Are they getting it out, you know, within the deal? How does that work?
Yeah, so we're not a cash flowing investment opportunity. So typically you're going to invest on day one, and your investment plus your profit's going to come out at the end of the project. So it's your money's locked up for the period of the timeline or the duration of the project. And you know, that's going to be one of the biggest risks that people would talk about in private equity. Because your money is locked up for however long the project is, you don't have liquidity, meaning that you can't just press a button
and get all your money out.
Sell it of it tomorrow.
Because we are building something, right?
Exactly.
That makes sense. There isn't money to take out of it. It's going into actually putting the building up.
Exactly. So that's why development by nature, it's a hard thing to cash flow. So if there's cash flow coming out of development, that's a tricky thing to do.
Yeah, might not be a good sign.
Potentially.
Yeah.
So generally, I would say that your money's locked up for the duration.
Yeah.
And to that point, people need to be comfortable with that, right? So if you are investing in a 3-year project and you say, I need my funds out in 3 years to the day, then maybe this type of investing isn't for you.
Okay.
And it's not to say that we don't want to be on time. Of course we do, or quicker than timeline.
Yeah.
But the reality is things can happen, and so we want people to be comfortable with a slight timeline extension, and not absolutely needing that money or those funds on completion.
Right on that time.
Yeah.
We just have a couple minutes left here, Darcy,
Sure.
but do you want to speak quickly? You've said projects in the GTA and South Florida. Why those locations? What is it about those? If you can just share with our viewers in a couple minutes here.
Yeah, so we sort of built the business in the GTA. We have sort of deep familiarity with our partners. We have great partnerships here, and know the terrain quite well, and sort of the intricacies of what's going on in Ontario, whether it's the Ontario Places to Grow Act, sort of how planning is done. And so the GTA is in some ways a no-brainer, just because that's sort of where the business started. And then South Florida, we had a great opportunity through a very large US developer. And actually, it has a lot of very similar characteristics, Miami and Toronto, in terms of rapidly growing population. Much of the population is foreign-born. You have sort of legislative and real land constraints. So in Ontario, we have the green belt and the lake to the south. Only so much land we can develop. Obviously, in South Florida, very much the case.
Right.
And then the lending environment there is also quite similar in terms of what we talked about earlier, which is pre-sales. So there's a lot of things that we really like about Miami, and in many respects, it looks very much like Toronto, actually.
Very interesting.
Yeah.
One thing, just in our last thought here before we leave, do people need to invest with cash, or is there other ways that they can put funds into these deals?
Yeah, so there's a bunch of ways. You can invest with cash if you so choose. Many investors invest through corporations or holding companies if they have them. But one of the great things about what we do is you can invest with registered funds, so TFSA, RSP, LIRA, RESP. And one of the things that I think why those are great is that our projects, as we talked about, aren't all short-term.
Yeah.
So to use a longer-term vehicle where your funds are tied up in that RSP
they're
for
in
a
there
longer-term
anyway.
project,
Usually
it's kind of a no-brainer.
Yeah, they're usually not making 20%, so if you can get them in something like this, it makes a lot of sense.
There you go.
Yeah, awesome. Well, we've run out of time for today, but thank you so much, Darcy, for coming and sharing with our viewers about how they can get involved investing in land development, investing in real estate with private equity. To you, the viewers at home, thank you so much for watching. If you want to learn more about this show or any other shows on The Everyday Investor, visit theeverydayinvestor.info. We'll see you next time.